this time is different. Look, judging by sentiment in some parts of the cryptocurrency space, we're forgiven for thinking that crypto had been banned worldwide. A new FTX collapse has happened. It almost destroyed the industry for a second time. Sentiment has been incredibly bad. If fear and greed are driving the factors in all markets, then it feels like crypto is in a state of terror right now. It's been bad news after bad news after bad news. Reaction to macro news is bad. Then we have this giant crime scandal going on over on Solana right now. But I'd argue that while conditions are currently not the best they've ever been, obviously, that what we're experiencing is actually not that different from previous bull runs, even if it doesn't feel like that right now. For those of you who were here before, take off the rose-tinted glasses to remember what happened. For those of you who weren't here, well, let's take a look at why actually this time is not different. Starting with the fact of current price volatility is actually not super extreme. So looking at BTC, is the current volatility very much out of the ordinary? Well, at least for the moment, the only unusual part is that Bitcoin is less volatile as compared to previous cycles. I mean, Bitcoin's growing up, it's got the ETFs and stuff. Just grab a couple of examples here. In 2017, there were drawdowns of 34% and 40%. There were like 7 or 8 of them. In 2021, you can find drops of 32%, 56%, geez Louise, 56% that went on to new all-time highs. Right now, on the other hand, Bitcoin's basically been ranging between like $109,000 to $90,000 for about 3 months now, which is insane. Unexciting? Crab-like? Sure. Massive consolidation? Yes. Not really panic-inducing stuff, but I know you're not all in Bitcoin, are you? Also, if we take a look at the crypto total market cap, we can see that it isn't looking too bad either. As we're in, for now at least, what looks like a major consolidation period with previous all-time highs as support. We had a major move up in the market, market's consolidating, getting ready for the next move. And again, nothing really leaping out here as being so strange or dramatically different from previous cycles. This stuff kind of happens. We have massive washouts in altcoins on a regular basis. Now, before we talk about crashes and headline risks, because I think that's very important to point out as well, a quick shout out to today's sponsor, which is Walrus, being brought to you by the SUI Foundation. Now, Walrus is the biggest innovation in decentralized cloud storage to ever hit the cryptocurrency markets. Demand for data storage, of course, remains exceptionally high and is only going to get bigger, with cloud storage projected to exceed $777 billion by 2033. Walrus is offering a more efficient, decentralized blockchain storage solution when compared to their competitors, and especially when compared to centralized services. Walrus can achieve availability for data with just 4 or 5 copies, keeping decentralization, but also keeping a light footprint. It can withstand major failures, scale with demand, and store large files from both Web 2 and Web 3 sources. Walrus supports smart contracts as well as decentralized applications. Its native token WAL, W-A-L, is used for staking, payments, pricing, and governance. This is probably going to be shaking up the cloud storage, data storage scene in the crypto space. And if you want to learn more about what Walrus is doing, how to get involved in this upcoming Tech Titan, click on the link down below in the description to learn more about what Walrus is doing and how you can get involved and earn some coins. Thank you very much for supporting our sponsors. Okay, now let's talk about the headline risk stuff. So why did BTC crash so hard during previous bull runs? Well, it was much smaller, it was less proven, its success was less certain, and it was much more sensitive to fear and greed factors and to headline risks, meaning sometimes it could plummet on news stories. But again, that's kind of similar to today, except that nowadays headlines are having a lot less impact than before due to the constant bid from Wall Street and the holding behavior of Wall Street ETF buyers. Recently, we've had Trump announce tariffs, right? And the uncertainty that a potential global trade war could break out. But take a look at the charts, and while there was some big wicks down, particularly on altcoins, the overall range structure for Bitcoin basically held up. Well, also the wicks got shallower as the market seemed to stop responding to tariff-related headlines. First big tariff news, everybody lost their minds. Third, fourth, fifth tariff headline, whatever. Markets don't even respond anymore. Compare that to the last cycle and the impact of the headlines around COVID. I mean, in March of 2020, Bitcoin was like on the track to zero, man. The liquidation machine was going so fast, it was nuts. Later, we had China banning crypto. We had Tesla changing its mind on Bitcoin payments. All these things resulted in sell-offs. And you can see that headline risk volatility is nothing new, and it's always hit altcoins the hardest. And it has at times in the past hit the charts much harder than now because the market's a lot bigger than now, much more liquid. You can currently find more impact from negative headlines, of course, on stuff like Solana, which sold off pretty bad amid allegations of huge crime, huge amounts of insider trading, implications and allegations against the some of the core protocols of the blockchain and core market makers, and the president of Argentina caught up in a corruption scandal. It's insane. But then again, Solana is an altcoin operating at a smaller market cap than Bitcoin. It's a smaller piece of the total crypto pie, and it's going to recover just fine. But it's also no surprise that it's more sensitive to bad news because it's much smaller. Meme coins, obviously these crash super hard as soon as that bid runs out. But what to say except they're deliberately designed to have no utility beyond gambling. Really, which is okay, but you just have to understand what it is you're buying. There's no like revenue model there. So it's fine to make quick profits. You have to understand what it is that you're throwing money at, and the base case should always be zero in the end for meme coins, and meme coins don't really say that much about the rest of crypto. So then the question is, why is sentiment so bad? Because you all been hyper gambling and don't have any Bitcoin. I get it. Look, one factor is that if you're checking into crypto Twitter every day, you're diving into a crypto native arena where a lot of people, including some of the loudest voices, are underallocated to Bitcoin, underallocated to major altcoins, have lost billions collectively in the latest liquidations that happened a few weeks ago, and are overallocated at the farthest ends of the risk spectrum, and they're losing their fucking minds to things like, you know, meme coins or the newest AI agent stuff. Look, I lost money on that too, but it was money I was willing to lose. In that scenario, if you haven't taken any kind of profits along the way, well, yeah, there are some very bleak charts out there and not a lot of reasons to be very excited. But the key phrase here is that they haven't taken any profits. Meme coins and AI tokens delivered some huge returns this cycle, but only for traders who cashed out some of that money along the way, which again echoes previous cycles. For example, take a look at NFTs the last time. Again, nothing new under the sun here, okay? ICOs, DeFi summer, NFTs. It's all the same new stuff, right? New narrative, new crime, new losses, new people failing to take profits. There are massive run-ups that don't always make a whole lot of sense looking back, and whether you have good memories or not, you never really want to see a JPEG of a cartoon ape for the rest of your life, depending entirely whether or not you took at least some small amount of profit on your NFT bags. Additionally, even when it comes to BTC, I think it's pretty fair to say that some holders recently got a little over their skis, let's say, when it comes to political developments. Or got a little too excited, maybe bought a little bit too high, too much allocation. Donald Trump was, of course, never going to rock up at his inaugural address in a Satoshi t-shirt and just declare, yeah, baby, screw everything else. It's all about Bitcoin, baby. Woo! Sell the Fort Knox gold, put it into Bitcoin. We're done. America! He's going to go to Fort Knox. That's going to be interesting. I'm curious to see what they're going to find. Is the gold still there? Anyway, the Bitcoin stockpile's coming. The Bitcoin strategic reserve's coming. Okay, it's going to take a little bit of time to implement, but those things are coming. Now, in the event that it doesn't happen, still doesn't matter all that much. Changes from the top are still creating an insanely bullish long-term environment for crypto. All the regulations coming forward, the altcoin regulations, the banking laws, all this kind of stuff. It's very, very bullish. And of course, you have to understand too, time frames matter. Okay, so thanks to all those changes taking place in the USA right now, the crypto industry is being set up with a mega, super bullish environment, probably the most bullish administration for crypto ever in the history of the world. It's literally happening. The stuff we've been talking about for the last decade on this channel, it's starting to happen now. It's insanity. This means we have a crypto-friendly administration, a growing range of spot crypto ETFs. I say crypto because we don't just not going to be just Bitcoin. We already have Ethereum, but we already have other ETFs that are probably going to be coming soon. Solana, XRP, Dogecoin, Litecoin. Financial institutions are working with crypto, tokenization of real-world assets. Real-world assets, we could see trillions of dollars of value on-chain in real-world assets over the next few years. It's insane. AI is shaking up the crypto scene in a big time. AI and crypto coming together, it's a perfect marriage. We have renewed interest in decentralized finance and in farming high APYs and in earning interest on your money and using your Bitcoin and Ethereum and Solana and stuff as collateral. And who knows what else might emerge in this kind of crypto-friendly setting with an SEC that isn't going to swoop in and try to punish anyone who so much as even looks at a blockchain. It's been 4 years of basically terrorism under the Biden regime, and this is a complete 180 for the crypto scene in the USA. But that doesn't mean it's up only all the time. People overestimate what's going to happen in the very short amount of time. They underestimate what's going to happen over the next couple years. And charts will sometimes look bearish on shorter time frames. In fact, this is completely normal. And again, if you look at previous cycles, it's happened multiple times. And if crypto develops into an asset class that doesn't suffer almost total implosions every few years, that'd be great. Then, of course, we could expect over time that prices are going to keep, well, looking kind of like how BTC looks right now. Just slow grinds up, and yeah, there'll be corrections. There'll be multi-year corrections. But it's not going to be the same kind of crazy we saw in the past. The crypto market's maturing, and that's a good thing. But overall then, I think you also need to be clear about your time preference. Your time preference. Everyone's trying to get rich overnight. And the guy who can have a 5 or 10 year time frame has a massive advantage over the overnight gamblers. Your chances of making it big are incredibly elevated compared to the overnight gambler guy. Now you might say, oh, but the 1 in a million guy who hits it big, yeah, but that's the 1 in a million guy. I'll tell you what, it's like 1 in 2 guys who hit it big by just holding. Much better odds. And of course, you do need to distinguish between Bitcoin and the manic world of meme coins and pumped up fun slaughterhouse launches, making sure that your portfolio actually reflects this. And if you're playing in the casino, don't get too caught up in the sentiment swings and make sure trim profits back into Bitcoin or stables or some of the top altcoins like Ethereum and Solana, whatever, right? And there's a lot of money to be made too on top altcoins. So while sentiment might be bad for high-risk assets right now, there's a lot of coins in the top 100, for example, that aren't that incredibly risky, that do have good network effects. And here's the thing, in terms of this time is not different. Some of the biggest gainers in any given cycle tend to be layer 1 blockchains, which have real business models and real users and can make you a 10x return still in this cycle. Some of those might be worth watching out for. I know you want to gamble on the dog coins. You can gamble on dog coins, just don't gamble the house, guys. Because this time is not different when it comes to the reality that when the next bear market comes, the vast majority of these meme coins are literally going to go to zero. And you've already seen how many have gone to zero because most of it's criminal cartel bullshit. Some good meme coin communities exist, but even the best meme coin communities will not be able to stop the inevitable decline down to minus 99.99% during the bear market. It's always what happens. Thanks for watching.